So the question today is the housing market going to crash with higher interest rates? Of course, you want to know, I want to know, we'll talk about it anyway. Hey there, this is KG, I'm a realtor with Fairfax Realtor in Greenbelt, where we help buyers to buy a dream home and sellers to sell their houses, and we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, move, invest in real estate in the Maryland, DC, Virginia region, contact us below. We'll take care of you, and don't forget to subscribe to the channel to get updates once we upload a new video. So the question is, are we going to see a market crash, housing crash, because interest rates is going higher? Whew, that question is loaded, right? We've been hearing news, the market's going to crash, the market's going to crash. We have all these pundits that have been saying the market's going to crash, and they've been saying it since 2020. Now we're in 2022. So what is going on? So listen, in the DMV area, and actually in all the states in the United States, the market is still very strong. This first quarter of 2022 is crazy. The market is really on steroids, like just crazy. Home prices are still going up. In the DMV area alone, in January, February, March, first quarter of 2022, we're still getting multiple offers on a house. We're still getting over asking price in the DMV area. But what is going to happen as we move into the second quarter, and then interest rate is high, right? Right now, interest rate in April is between 4.25% and 5%. That is high, right? When you compare it to what we've had in the last 3 years for 30-year mortgage. Depending on your credit score, it can go high as 5%. That is what the interest rate is today. And for 15-year mortgage is about 3.65, even up to 4 point something for 30-year mortgage. That is high. The prediction last year by all these mortgage giants, and I did a video on that, Fannie Mae, Freddie Mac, and NBA, they were predicting that interest rate will be about 3.3 in 2022. And here we are, beginning second quarter of 2022, we are already at 4.25. Why? Because inflation. So the Fed increased short-term interest rates back in March. That caused, which shouldn't supposed to be, because this is short-term interest rate, but it does affect mortgage rates. So interest rates is high. Inflation is causing mortgage rates to go high. So is that going to make the real estate market crash? Is that going to make home prices drop? Hold your horses, right? Before you jump into that. So this week, first week of April, the Federal Reserve Board of Dallas, you know them, like Federal Reserve Board, put out a blog post that the real estate market is in an abnormal shape. And I agree. We all agree it's abnormal. I mean, they are abnormal. But at the same time, they acknowledge and they agree they are not thinking we're going to have any crash as it did in 2007 to 2009. Why? Let's discuss it. Why? Because people that bought houses now is quite different from people that bought houses back in 2007, 2009. Listen, 2007, 2009, prior to that, the real estate market was on steroid as well. But we have all these designer loans, no doc loan. Do you know what that means? No documentation. You just walk in from the street and say, I make this X amount of dollars, and they give you no documentation loan. Then you have adjusted mortgage rate. Oh, you can buy a house of 600,000. We just give you an interest rate adjusted for 4 years for 2%. But listen, once it starts going up, your payment goes up, and they cannot afford it anymore. We do not have that after the crash. After the crash, the lending companies, the mortgage companies, and the federal government, they tighten the requirement to buy a house, to get a mortgage. So that is one of the reasons why we know that the crash that happened in 2007, 2009 is not likely to happen with this crazy market, because people have verified jobs, income, unlike before. and there's not a lot of all these adjusted mortgage rates, interest rates during this time. The second thing is most homeowners right now actually have cash, right? You're sitting in cash if you have equity. So before any homeowner allow their house to go to foreclosure, they will sell it because they have equity. So what is fueling this interest rate? What is fueling this housing demand? Listen, millennials are in the market buying houses, Generation Z are in the market buying houses, and the supply is not meeting up with the demand. That's why the demand is still there. And listen, a lot of buyers that are buying, first of all, they are afraid of missing out, fear of missing out, remember that. And then because the rents in some area in Maryland, DC, Virginia region, if you're living in some of this metropolitan area, DC, Silver Spring, it's not even making financial sense to be renting because you're paying as much as you're paying in a mortgage. That's why people want to park their money, want to be able to reduce their housing expenses, because when you get a mortgage, your housing expenses is fixed. Unlike when you're renting, because your rent can go up at any time. That is why that demand is there. So are we going to have a crash even as interest will go up? No. I know some people wish it, but listen, I don't wish it, but I know it's not going to happen. Why? It's likely to happen. What we're going to see is slowdown even as interest rates increase, because we're still at 4 point something right now. Who knows, maybe we're going to go to 6%. And when I tell people 6%, people are like, 6%. Listen, there was a time 6% was good. But hey, if you've been in the market for the last 4 or 5 years, you think 6% is crazy. But maybe it's going to go to 6%. Who knows? What is going to happen is, because interest rate goes up, buyers will not be able to qualify for as much houses that they can buy. Interest rate, hence, their qualification will go down. So now there may be a reduction in buyers. Demand may slow down, but it's not going to crash. Because demand slow down doesn't mean it's going to crash, right? So demand is going to slow down, and buyers are going to have more choices to make when more sellers come in the market. But as of this second quarter of 2022, the housing market in the DMV is still on steroids. So if you are a buyer in this market, don't be discouraged. I'm telling you, don't be discouraged. People are still buying, but don't be discouraged. Be persistent, right? Expand your horizon. Don't get stuck in an area. You want to be closer. Can you drive out a little bit more? Look at that and make your make that one of the things that you can look at to drive out a little bit more. Because the more you want to be in an area, if more people are there, this competition is going to be high. The second thing is, buy what you can afford and look at housing as a long-term investment. It's not a short-term investment. So pre-adventure market crash, it should not bother you, because over the long term, you're going to hold a house, especially if you're buying, a first house. So be mindful of that. Don't look at the short-term gain. Look at the long-term that you're going to hold the house. And if you are a seller in this market, like I always say, don't time the market. If you're ready to sell, listen, market is still very strong. We're getting multiple offers on houses. Put your house in the market. Let's do it and sell the house for you and move on with your life. But remember, you're going to be a buyer somewhere, right? If you're buying to relocate to somewhere else, of course, definitely you're going to be a buyer somewhere. You're still going to meet the competition. It is the same way every market. Competition, just depending on the area. DMV is unique area. Maryland District of Columbia and Virginia is a unique area because of the industry that are here. It's very, very competitive. So the thing is the market going to crash? No. Interest is going to go up? Yes, it's going up. But hold your horses. Don't wait for the market to crash. If you're going to buy a house, buy it. It's not going to crash. All right. So if you're looking to buy in this hot crazy real estate market or sell so that we can get you up on your way, contact us below. We'll take care of you. And don't forget to subscribe to the channel to get updates once we upload a new video. Ciao.